coming into today, yesterday had a lot of trading range action, and it had a tight trading range in the middle. So that will act as a magnet. Any channel that goes up is a bear flag. Any channel that goes down is a bull flag. So you have a big bear flag, a smaller bull flag, and a smaller bear flag. So there was two-sided trading, and the market's probably in breakout mode coming into today's open. And today opened, right in the middle of that tight trading range at the close. Usually the first bar or two or three of the day give you an idea of what the day will be like. The first bar looks like a trading range day. It's opening on a flat moving average inside a tight trading range of yesterday's close, and just about in this protracted tight trading range. Also on the daily chart, a couple days ago, there was that range expansion day, the good body, and when you have these channels and these suddenly a big breakout bar, you usually get a couple sideways, a day or two of sideways price action. So not surprising that both yesterday and today were trading range days. Okay, this is a wedge, and it's a channel. Wedge means two legs down. That's one. That might be two. I don't know. It's not very convincing. Now, you have traders who saw this as two legs down and who bought, so they're trapped. You could argue shorting this. It's a wedge here, a breakout pullback to a new high. My concern is this is a tight trading range. In general, I try to avoid trading that. Now, so you get trapped bears here, a second attempt up off a bull bar. What about buying above that? I think that was an outside bar. It's an outside bar. I would be more comfortable buying this than any other trade of the day, but to me, it's buying the top of a tight trading range, and I think it's probably better not to do anything. Turns out, if you bought above the bull bar, you would have been in a 5-tick trap. If you bought it as it went outside up, you could have made a scalp. Okay, now this is the first sensible setup for me of the day. You have a wedge and an expanding triangle, up, down, up, basically a wedge. I think that's worth a short. Decent looking entry bar, bad looking next bar. So now you're on a 5-tick failure, possible double bottom bull flag. I thought this is a big enough wedge so that it should have two legs down. My problem was the double bottom and then the bull body. I think most traders should just go ahead and exit with the 2-tick loss of this bar. I would not buy because I would expect a second leg down. If you held, you'd use the entry bar high as a stop. But, you could do it either way. Another double bottom bull flag long, I wouldn't take it, even though it's a decent looking bull bar. To me, the market right now is always in on the short side because of this wedge. I'd want to see what the second leg down looks like. The always in traders would have their stops above this bar. So to me, I'm expecting a lower high and more selling. And the market gave the lower high here. Not a great looking signal bar for a short, but I think it's worth taking to see where we test yesterday's low. Okay, market came down for a couple points. Now, tricky situation here. Two legs down, and also a breakout below, a swing low on what appears to be a trading range day. That could be a decent long. I don't like the small doji bar. You could also argue it's 3 pushes down. Here's the first push down, second, third. So it's possible. On the other hand, it was a breakout of a double bottom. Maybe it'll form a breakout pullback and then have a second leg down. On a trading range day, I think it's okay to be buying the first reversals because they so often work. But because of the problems with this one, I wouldn't have a problem not taking it. At this point, the market looks bearish. You have bars with 2, 3, 4 tick bear bodies, small tails, 3 bars with shaved bottoms. I think there's probably going to be more down. Okay, you have a bull reversal bar but it's largely overlapping the prior bar, and the prior bar is a strong bear bar. It took out this swing low from yesterday, and it double bottomed with yesterday's low, so it's testing that gap on the daily chart. To me, this is enough of a sell-off so that I'm only looking to short. So I would not buy that. You can argue 2 legs down, 1, 2, and a larger 2 legs down, 1, 2. But to me, there's too much down momentum, and I'm only looking to short. Now the market is giving a bull reversal bar. Again, it's another test into the gap. You have a small wedge here. You got 2 legs down here. That's a good-looking bar. Shaped top, no tail on the top, small tail on the bottom. If this is particularly strong, this 2-leg down pattern is all that the bears will see, and the market will try to reverse up. In any case, if you bought this, I think you have to put your stop below the low. And if the risk is more than you want, I think you trade smaller. Because this is pretty much of a channel, you can draw a pretty tight trend line across here. You have a risk, higher low coming in other words, risk of a pullback. If you're long, I think you have to be willing to sit through that. This is not good price action for long traders. Okay, here's a second entry here. Here's first entry. Here's the second entry. So I think a lot of traders would have exited below here, but in my mind, the exit point is below the original signal bar. Market might be trying to double bottom here. Also a high 2. Here's a high 1. Here's a high 2. I think it's okay to go long there. Then you have an inside bar. Even though it's a bear bar, I think that's an okay long as well. If you have a double bottom and a pullback, it's usually a fairly reliable long. Sometimes you get a pause instead of a pullback, and a pause can occur in the form of an inside bar. Okay, entry bar, next bar even better. Close on its high, it's going up okay here. To me, the most interesting thing about the day today, I talked a lot during the day, and probably 90% of what I said is don't take this and don't take that. If you, in fact, didn't take all those trades, you would have avoided a lot of losers. And if you took the few good trades, to me, the single easiest trade in the day was this one. If you took that one trade, you would have ended up on the positive on the day. But to me, just look at all the whipsaws. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and then 18 loser here, 19, 20, 21, 22. There were over 20 opportunities to lose money today. I think I pointed out most of them during the day, probably all of them. And even though there weren't that many good trades to take, I think the most important thing today was not losing money. It was very easy to lose money since most of the setups today resulted in losses. But every one of those setups had problems with it. And if you were really cautious and just went for the few good trades of the day, shorting this was okay. You could have lost a couple ticks. Shorting the lower high was okay. I didn't take this and I didn't take that, but they were both good trades. Either buying here with the stop here or buying here or here, I think those are okay. I made a mistake of not shorting this. I think this is an okay buy. There were a few good trades, not a lot, but a few. Going into tomorrow. Okay, the market had a trend line break and a pullback to a lower high. Since the market is still in a trading range, it's still in breakout mode. It was going up for several hours today, so it may try to go down. Anytime the market goes up for a while, I see it as a bear flag. But bottom line is, we were sideways today, so today's a trading range, and therefore the market's in breakout mode. It looks like it wants to break out to the upside tomorrow. It's been pressing up here on around 62 repeatedly. So I'm assuming the market will try to break above 62 tomorrow. And then we'll just wait to see if the breakout fails, if there's a breakout pullback, the usual routine. All right. Good night, everybody.